Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that doesn't look like our trading partners are going to be that helpful getting us out of recession. This week we'll be watching for the selected price inflation indications on Friday, and financial markets will be doing their final jostling for the following week's set of monetary policy decisions, first from the RBA on Tuesday of that week and the RBNZ the next day. But this coming week, the US will release its CPI and PPI reports, and the Fed will face a partisan Congress to explain the monetary policy report they released over the past weekend. India will release its updated inflation data, and the EU its fourth quarter GDP growth result. And this week a set of sentiment surveys will be released in Australia. Over this weekend, there were some major releases from the US. First, the Fed released its semi-annual monetary policy report. Although it got almost no wider media coverage, it does point to some very interesting stresses they're going to have to work their way through. And they are issues that could have global consequences. While they see banks having ample liquidity at present, previously they saw abundant levels, so a shift, in fact, as a proportion of their economy, it is historically low. If banks have low liquidity, that puts the Fed in a tough spot if it wants to keep shrinking its balance sheet. The Fed's normalization is an economic tightening process that only works without consequences if the banking system has excess liquidity. When that shrinks, as it seems it is, then overall low liquidity could jerk benchmark interest rates higher. Something will give, and the Fed may have to stop its quantitative tightening process. Announcing that is a very big market signal, and this monetary policy reports suggest it is close. Secondly, total US consumer credit surged by almost $41 billion in December, far exceeding the forecasted $12 billion increase. In fact, it was the largest increase in the history of this metric. Revolving credit, which includes credit cards and personal lines of credit, jumped by $23 billion, while non-revolving credit, which covers car loans and student debt, increased by $18 billion. The overall 2.4% year-on-year rise suggests consumers are only modestly taking on more debt, however, similar to inflation's rise. Thirdly, US January non-farm payrolls growth came in less than expected, up 144,000 when the average market estimate was 170,000. In 2024, that would have been regarded as a big miss. The data collectors said that wildfires in Los Angeles and severe winter weather in other parts of the country had no discernible effect on employment in the month. Their jobless rate ticked down to 4%, and average weekly earnings rose 4.2% from a year ago, so overall a mixed picture. And fourth, the University of Michigan Consumer Sentiment Survey for February fell from January, and quite sharply. It's the second straight month of retreat, and now its lowest reading since July 2024. Both the conditions and the expectations measures fell. There was also a large slide in buying conditions for durables, in part due to a perception that it may be too late to avoid the negative impact of their tariff policy. In addition, inflation expectations for the year had soared to 4.3%, the highest since November 2023, from 3.3%. This is only the fifth time in 14 years we've seen such a large one-month rise in year-ahead inflation expectations. Many consumers appear worried that high inflation will return within the next year. Not only is this measure of sentiment down in February from January, it is down even more sharply from February a year ago. And it is not going to get better. Trump is signaling reciprocal tariffs on many countries, also expected to raise costs for Americans. It will be a major international escalation if he does that. No indication here on how that will affect New Zealand, that doesn't basically have any tariffs with anyone. An uncertain and fearful American middle class may have a much bigger impact on the global economy than even their new public policy direction. Of course, the two are related. North of the border, Canada turned in a very strong jobs report again, its second consecutive big gain. 76,000 new jobs were added in January, far higher than the 25,000 expected. Their jobless rate fell to 6.6%. Of course, this too is much more uncertain when looking ahead, for the same US-based reasons. As the New Zealand dairy industry knows, Canada has an illegal trade protection scheme operating for its dairy industry, a system of supply management. Their industry leaders, though, don't think it is being threatened in the current stoush with the US. And while we're reporting about dairy, we should note that American milk consumption rose 3.2% in 2024, while artificial plant milk consumption fell 5.9% in the year. That's happening at a time when US milk production is steady and will no doubt create some interesting market supply stresses. But these signals may turn that around in the next season. The cost of feed for the mostly barn-housed industry in the US will be the main indicator of how enthusiastic their response will be. And Japan is reporting that household spending jumped in December and by very much more than anticipated. It was up 2.7% in December from November, when only a 0.5% rise was expected. That large monthly shift now means that the year-on-year rise is 2.3%. If Japanese consumers are opening their wallets, it is both a sign that sentiment is rising, and it will be some counterbalance to the US ructions and the Chinese slowdown. We should not forget that Japan is the world's fourth largest economy, larger than India. It is similarly important for New Zealand exports. And India cut its policy rate by 25 basis points to 6.25%, its first cut since April 2020. Their forecasts indicate rising growth and falling inflation. Although that may be what Prime Minister Modi wants to hear, they may be brave forecasts. But they are juicing up the stimulus, with this rate cut as part of a two-part action to complement last week's income tax cuts. In China, their January CPI inflation is meandering close to zero, although it picked up to 0.5% from a year ago in this latest update, and that was because of a 0.7% rise in the month from December. So perhaps they have avoided deflation, in this official data at least. But beef prices were little changed month on month, but down 13% from a year ago. Lamb prices were up marginally to be 5.6% lower than a year ago. Their milk prices fell rather sharply in January, taking the annual dip to 1.7%. China's producer prices remained deflationary, down 2.3% year on year. China said its official reserves rose marginally in January, now at $3.2 trillion US dollars. $769 billion of that is in US Treasury debt and falling. Global world food prices were little change in January and are still running lower than year ago levels. There was a small dip in sheep meat prices, a rise in beef prices, and a big rise in dairy prices. In fact, dairy prices are now at 2-year highs, but are still 10% lower than when they peaked in June 2022. The US Treasury 10-year yield is now at 4.50% and up 5 basis points from this time Saturday. And the price of gold will start today at $2,860 an ounce, little change from Saturday, but this is up $50 from a week ago. In between, gold hit its record high of $2,883 an ounce. Also note, China is now allowing its insurers to invest in gold. Oil prices are little changed at just on $71 a barrel in the US, while the international Brent price is still at $74.50 a barrel, but these levels are $1.50 lower than week ago levels. And the Kiwi dollar is now at 56.6 US cents and up 10 basis points from Saturday. Against the Aussie, we're unchanged at 90.2 Australian cents. Against the euro, also unchanged at 54.8 euro cents. That all means our trade weight index starts today at just on 69.9 and the same as on Saturday, but down 30 basis points from a week ago. And the Bitcoin price starts today at $96,463 and a minus 0.3% slip from Saturday, but it is 6.8% lower than this time last week. Volatility of the past 24 hours has been low at plus or minus 0.8%. And we should also note that El Salvador has ended its experiment where Bitcoin was legal tender. It isn't anymore there. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.